Hello, folks of the Teen Business Forum. My name is Paul McNeil, and I'm a mentor with the forum. I go by the handle of TDF Mentor, and I've got some information to bring to you today because I think you're going to need to hear it. I had someone reach out to me from the forum, and he was in a position to where a company asked him to fill out a W-9. A W-9 form is used for independent contractors once they've crossed a certain threshold that our businesses are required to have on file as a result of some recent legislation. And so he didn't know what to do. So he messaged me and said, "Hey, listen, what's this W-9 and what am I required to do?" So W-9s applies to independent contractors, which a lot of you probably are. And if you've done more than $600 worth of services to any organization in a calendar year, you're required to fill out a W-9. Now, that W-9 allows them to issue you at the end of the year a 1099 MISC. This 1099 MISC is what tells you how much money you have earned from that organization. Now, here in the U.S., Uncle Sam says, "Hey, once you've crossed $600, I need to know about it." And for those of you who are not in the U.S., I would love to connect with you to find out what's your equivalent to a 1099. Now, 1099s come into effect once you crossed $600 worth of service. And again, all it is just a report. Now, what you have to do is you have to file taxes. And if you happen to be younger than 19 years old, I would recommend, and I'm not an authority here, and I definitely recommend you seek professional counsel, but based on the tax system, I would recommend that you file your own taxes and not put that onto your parents' taxes. Now, your parents can still claim you because there's three things that determines if a parent is able to still claim you as a dependent. First is that if you live with them for more than half of the year. The second is if you are 19 years or younger. And the last one is if they still provide for half of what it takes for you to live. And in this situation, I'm almost certain that most of you fall into that camp. Now, with that said, there's a thing about being an independent contractor that a lot of people don't do, and that is estimated self-employment taxes. Once you become an independent contractor, a successful independent contractor making gobs of cash, you are required to pay your own Social Security and Medicare. Now, with most businesses, most of us that are employees of businesses, the employer takes care of half of that and you take care of the other half. But as an independent contractor, you're required to take care of both halves. So this can become quite a tax on you. The key to remember, though, is that if you're filing taxes for the very first time, you don't have to worry about estimating out your self-employment tax. And the reason for that is that you don't know how much it's going to be. You have no idea. You can't really estimate anything that you haven't earned yet. So that's why for the first year. Now, the second year, if you've actually owed taxes on your tax return, let's say for 2011, when you get ready to file next year in 2012, that it's determined that you owe the IRS money, the next year you need to begin to estimate out your self-employment taxes because enough wasn't taken out. And that's why you have an estimated self-employment tax. If you didn't owe, and don't quote me on this, but I'm almost certain, if you didn't owe for the previous year, you still do not have to do estimated self-employment taxes. That's the way I read it. Again, please, please, please get professional help with this. And one of the ways that you can get that is by calling the IRS direct. I did that. It costs you absolutely nothing. Why go to HR and Block? Why to go to the other tax people? You can go straight to the IRS if you know what to ask. Now, if you have no idea, then those other tax professionals are a great resource. But for the most part, yeah, that's the deal behind being an independent contractor and a W-9 form and a 1099. You will, again, have to file taxes at the end of the year. It's called a 1040, and you will file a Schedule C or a Schedule CEZ. What determines a CEZ is if your expenses were less than $5,000. If your expenses were more than $5,000, then you need to file a Schedule C. The trick to all of this when it comes to self-employment taxes, and the goal, so to speak, is to make sure you can keep your net profit at bay. And that comes by having expenses in your business. Now, again, it's catch-22, right? If you don't have any profits, then why are you running a business? You will have taxes to pay, and this is just one way of controlling that and taking care of it. So if you have any questions about this, if this isn't clear, please reach out to me, contact me. We can dialogue about it on the forum and go from there. But again, thanks for the gentleman who asked the question about this, and I hope this brought some more clarity to it. Thanks.